Welcome everyone, my name is Melissa Armo and I own my own company called the Stock Swoosh, which I started a long time ago now, 2012. So long time ago. I cannot believe that it is almost 2026. I literally cannot believe today is October 1st. It actually feels like fall here in New York. It was in the 50s, low 50s this morning. But the year's going so fast, so quick. And if you don't take advantage of opportunities in the market, you're going to miss it. You're going to miss it. And life is moving fast. We have goals, we have aspirations, we have things we want to accomplish, and we have to get busy. And we have to take action to make those things happen. So today we're going to talk about trading. We're going to talk about making money trading momentum and gaps. I trade gaps. And we're going to go over last week's room results. Now, just so you know, I trade options and I also day trade. Okay, so when I say day trade, I mean I'm shorting a stock on margin. If you don't have a margin account, you can buy a put, for example, which is an option. Now I'm doing both, okay, which we'll talk about today too. Again, if you have any questions, you can plop them in the room, but welcome. Again, we're here today. We're going to talk about making money. That's the whole point of this. Does it mean that every trade works? No. Sometimes I take a trade and it loses. And then sometimes I do what's called a retake, okay? But overall, I have a system I developed long time ago, started trading in 2008, took me 3 years to develop this system, and it's a system I use every day where I'm looking for stocks that are gapping, okay? If you have questions as we're going along, you can email me at melissa@thestockswoosh.com. You can follow me on X, Facebook, you can give me a call if you have questions too. YouTube's probably the best place to follow me because I post a lot of videos on YouTube if you ever have any questions. But one of the reasons I started trading was I wanted a new career. Now, if you're someone that's like, I love my job, I'm happy with my job, or you're retired, you just want to make extra money, I think it's important to know your goal. Why are you doing this? Yes, you're doing it to make money, but why? What do you want to accomplish? You know, a lot of times people say, well, I have a small account. Okay, then you have to still set goals for yourself to build your account up to a larger account, and then you can risk more to get where you want to be, okay? You know, we're living in a world right now where I think really financial freedom means peace of mind. It means that you don't have to worry when you go to bed at night, when you fall asleep at night. You have money in the bank. You feel security. And so if you're someone that wants extra money for all of these reasons, then you might want to look into trading. So I put the room results in here. This is through the 28th. Through the 28th, which was Monday, the trading room results year to date, I'm risking an average of about $4,000 a trade. These are all margin trades, $949,931. So we're on a roll here for this year. Very good, strong year. And what you might find shocking is that most of the trades we did in the room were shorts. Again, we're going to talk about shorting. So I'm mostly short. You said, well, how can that be? The market's been making new highs. That's true. And yet, I've been shorting lots of stocks. So again, my win ratio is 61% year to date for the room. 236 trades, 142 winners, 92 losers, and 2 break even. You don't have to risk this much. You can risk less. I also do options, okay? Now, I'm risking more of my options, an average of around $8,000 to $9,000 a trade. You can do one contract. You could risk $500. You don't have to risk a big amount. Again, so my stats for my options, my profits, are larger. My stats are in line, similar to day trades. You can buy a put and pay whatever you want to pay based on the cost of whatever you decide you want to spend. But it should be equal or close to equal in every trade you take. So if you're not willing to risk the same amount, like $1,000, then you have to lower it. It's an active letter. We're doing a lot of trades. So we're up over 3 million for the year, or I am, with an average risk of around 8,000. Some trades I took a little more risk, so I'm a little bit less. But stats for the year, 65% win ratio. And so for the year, again, this is not through the last few days, 3.9 million plus, and I'm excited to go into the next 2 weeks because, again, earnings season starts. Earnings season officially starts not next Monday, but the following Monday, the banks report. Why is earnings season significant? Because lots of stocks on earnings season actually gap. And again, I focus on gaps. That's how I'm making the picks. That's how I'm deciding whether I want to go long or short or do it at all. So getting back to what I was saying, is it possible to make money trading? The answer is yes. I have found that a lot of times people, what they end up doing is they go back and forth trying to always find the next get rich quick thing. And they never really get good at anything. They never really focus on learning. And you have to do that. Again, I got into gaps and shorting because I did a trade when I first started out and I made a lot of money shorting and it wasn't a gap. And I said, well, there's something to this. And I was trading small size when I started. And I was trading live money, figuring it out back and forth. So $150 was a good low risk for me to develop my system, because if I lost, it was $150 lost in a trade. And if I made money, I could make $300, $400, $500 in a good winner. So whatever you decide to do, even if your goal is like, well, I want to make this much money a year, this much money a year, I say chunk it down. Chunk it, chunk it, chunk it. Look at it in a daily basis, a weekly basis, a monthly basis. Sometimes looking at it as a whole is overwhelming for people. And then if they have a bad day or a bad 2 days or a bad week, then they feel like, oh my God, I'm never going to make it. I'm never going to make my goals. Break it down some way that you can comprehend that it's possible, where you're just taking it step by step. Don't get ahead of yourself, with your goal setting. And again, I've used this example before, but it's a good example. In fact, I was doing a mentoring session with a lady the other day. She's a small account. She's slow. She's new. She's happy making $100 a day. I said, that's $500 a week. That's $2,000 a month. So it depends how much you're risking. It depends how much the size of your account is. All of these things count, but be in the moment where you're focusing on what you're supposed to be doing and not so concerned about the money is going to help you eventually get to the point where you get really good and that you can risk more. Do you know what I'm saying? So again, $150 a day is $750 a week, or $39,000 a year. That's great part-time income for people. And again, it depends where you live. It depends what your time is, but we're trading between 9:30 and 10 a.m. Eastern time. The room opens at 9, so you got to be available in the morning to trade. But even $5,000 a week is $260,000 a year, and that's $1,000 a day. And so you say, well, what about the days you lose? Okay, so then you have a day you lose. Maybe the next day you make $3,000. So again, it all evens out. It all evens out over the time that you're doing this if you're constantly staying consistent and focused, okay? So I always say to people, you need to chunk it out. Chunk it, chunk it, chunk it. Set your goals per day, per week, per month. Don't get overwhelmed. Don't get overwhelmed, because that's where, again, people start to make stupid mistakes, get greedy, panic, kill trades that go on to work, and so on and so forth, or risk too much, double down, when trades are going against them, which is dangerous too. But you can do this as a full-time job if you look at it like a job and you take it seriously. So I've always kind of been that way, because I was very serious about doing this and I wanted to change careers, and I knew I could do it. I absolutely knew I could do it. Now, for someone that's been trying to trade for a really long time and you've been losing money or back and forth, you have some good years, some bad years, and you're trying different things, there's something within you that thinks that this is possible and you can do it. So I say, don't give up. Don't give up. Maybe you haven't found a consistent system yet. But again, the most important thing is to do it, to not give up, and to find something that you can really throw yourself into and learn. And again, show up every morning. Show up for the room every single day. You can do it from home. It doesn't matter where you live anywhere in the world. That's a nice thing about day trading. I have people all over the world. In fact, I have talked to a mentoring session with somebody today. He's in Spain. So again, people could be in different time zones. You could be behind, you could be ahead. It's whatever you have available with your lifestyle that you make it work. We're in the room only for half an hour, 45 minutes at the most. You can make time to do that in the room in the morning, just for a short period of time. Again, if you're in the office, you can do it in the office, okay? And like I said, you can do it from anywhere in the world. So it's only a few hours a week if you want to learn how to trade. So how can you do this? How can you earn a living trading? And again, I'm using $20,000 a month, but you could even make way more, as you see. It depends how much money you want to risk. And if you're willing to take that risk. Again, when I started out, I started very small. And over the years, I've grown my own confidence, my own conviction to be able to do it and risk more, So if you're trading and you're trend trading, let's just say, for example, I'm going to use an example. If you're just swing trading or trend trading right now, that's all well and good if the trend is going in your favor and you have the market's help. Okay, what are you going to do when that stops? When the trend changes in the stock or the market? So I developed a system where I'm looking to short every day a bearish gap down. If I don't find a good short, I will go long, but I prefer to short. So every day I'm looking for a good short, okay? So I'm very, very specific with what I do. Again, I'm trying to find a needle in a haystack each and every morning because you only need one good trade a day to make money, and then you add the size, and then you add the size. So I'm looking for the footprints of institutional money in stocks or the market. Who is buying? Who is selling? Who is shorting? Okay? Any questions here so far? I see some people came in late. If you want to chat, you have to go down to the chat box, pick new chat, and then choose my name and type in the box. Just put a hi in here if anybody doesn't know how to do it. Everybody see that? In case you want to ask me a question. Okay, let's keep going. So, again, the number one reason why people lose money in trading is what? The number one reason why people lose money trading is that they get the direction of their trade wrong. They completely misread the trend. They're getting in when they should be getting out. They're getting out when they should be holding on. They do not know what to do or how to do it or when. People misread what's going on and they do not have a clue what to do next. So because of lack of knowledge, people do nothing or the wrong actions, like I said, which is not the best idea in today's markets. So again, if you're someone that's trying to figure out what to do, it can be confusing. It can be stressful. And I found that people in general, they say they want to risk money in the market, but then when they're in a trade or the trade goes against them, then they get scared and then they get stressed, okay? You don't want to be stressed out when you're trading. I know that may sound like, well, how is that possible? If you understand and believe in the system that you're using, you shouldn't be stressed. Even if a trade is down, you either have conviction it's going to go on to work, or you have conviction that if the trade stops, you can either retake it or do another trade and then make money, okay? And again, any questions here, you can plop it in the room. If everybody knows how to chat, you go to new chat. So getting back to what I was saying, who sets the direction? Who sets the direction in stocks? The overall market, who? Big money, institutional money, power money in the market. Again, there's lots of money in the market. We talk about hedge funds, there's small funds, there's big funds, there's medium-sized funds. There's all kinds of money doing all kinds of things. And I call it the power money people. You have to look and see what's going on at any given day and time. So what do? I trade momentum. So again, whether the trend is up or down, I'm looking to trade momentum. Now here was a short we did. This is Amazon. This is a chart of Amazon. This was 2 weeks ago, whatever. Can everybody see it here? So we had a big fat bar here in Amazon. So again, stock closed here, open, snug as a bug, right around 227 and change, dropped, fell $7 plus on the day. What happened here? It got sold off, it got dumped. It's a big fat red bar, a big bearish bar. So what happened here? Again, I don't even remember the reason. People dumped it. So the power money people sold Amazon, okay? They dumped it. So again, we shorted, so you could do a put or you could do a day trade, but you're not making money here if you're long. Again, you have to get the direction right. So this is a short. So there is only one thing and one thing only that can move the direction of a stock, and it's money. It's not a little bit of money. It's all of us. I could have 1,000 people in the room. It wouldn't matter. I'm talking about a lot of money, like more money you could even think of or dream of or picture in your head, or what I call power money. Power money is in charge. It can make a bar like Amazon fall. Power money is in charge of the stock's direction. Trends are set and move with the power money people, of which there's a lot of in the market. The amazing thing is that as negative and traders and analysts talk about the power money people, they're the reason that one individual can be successful in the market. So you are not going to move a stock, but you can look at something and predict then that it's going to continue the move, whether up or down. Again, today we're talking about shorting, and then you get in. And I get in very, very early. Again, I'm trading early in the morning between 9:30 and 10, not late, okay? Before the move happens. So the whole concept of shorting is what? We're betting the stock price will drop, that people are going to sell and short too. Again, hedge funds can short. But this whole concept of shorting, we were talking about this in the room this morning. So many traders don't understand it. They don't know how to do it. And I'm telling you, you're missing out on a whole other world if you don't know how to short or you're not shorting. And again, it's kind of interesting. My stats so far this year and my results, given how bullish the market has been since April. Like, I have to pat myself on the back for that. But, you know, at the end of the day, it's like, it doesn't matter what you're doing, long or short, as long as you get the direction right. It doesn't matter what the market's doing or the overall stock and the trend if you get the right pick. And so if you're someone that prefers to go long, that's fine. But what are you going to do if a stock falls? What are you going to do if the market falls? Go long? You know what I'm saying? So I have found that shorting actually gives me an edge. This is what I'm good at. It's what I'm good at, actually. So this was another one we did here, AMD. So we were talking about what is a gap. Let's go over that. What is a gap? Again, stock closed here at 4 o'clock. Closed up here around 163 and change. Boom. Gap down here around 156. Open, fell. Dropped, came all the way down to 150, broke it. This is a massive bar. Again, somebody dumped it. It sold off. It's a big fat red bearish bar. So a gap is the difference between the close and the open. So AMD gap down. Then I went through my process that I do each and every morning. I said, is this going to rally or is it going to drop? I said, it's going to drop. And then we shorted it, got the drop. So again, another example, great example. If you shorted that there, you made money. If you went long, you lost. Okay? So let's talk about some more gaps. There are bullish gaps too. Here's a bullish gap. Stock closed here, gapped up, but it fell. So again, if you tried to go long here, you lost. We didn't go long here, but I'm just showing you. So you have bullish gaps and you have bearish gaps. Here was a bullish gap that you could have gone long, even though I didn't do this either. It was a little baby green. Closed here, gapped up, rallied. Tried to rally. That was back in the middle of September. So there's lots of gaps. There's stocks gap every day. The market gaps every day, all over the place. Lots of times when people are in trades, people love to do options because if the cost is less risk. For me, I like to do options because I can hold overnight. But people are like, well, if I'm doing a put in AMD, that's a lot cheaper for me and the cost is less and I'm shorting the stock of the money that I need to do it on margin. That's true. I get it. But for me, being in something and getting in the trade and being in it overnight is really where it's at. Really where it's at as far as making money goes. Because you can hold overnight, unlike a swing trade with a fixed risk and an option. So we were talking about this earlier and I said, this is a chart. I should have updated this here. This is back to the 16th. We're even over this now. We're even over this today. So can you shorten a bullish market? Yes. Can you shorten a bearish market? Yes. Remember back earlier in the year when we fell off January, February, March into the beginning of April. This was all the slide. It's like a slidey board, like you're on a water slide. One of the reasons I got into shorting, one of the reasons I think it's such an advantage to know how to short and to do it is because moves to the downside happen quick and fast. And again, I like fast trades. We actually did a long on Monday. We went long BABA, but it went very fast. That was unusual. But most of the time, the shorts go way, way quicker. And so again, you could make money going long for 2 weeks and make XYZ amount of money. Then you can make money shorting for like 2 days and make more in 2 days than you made in 2 weeks shorting. Because short moves happen big and fast and quick. And again, like a slidey board where they can just go straight down. It seems impossible, but it's true. But again, it's this idea of panic. So when the panic comes in, you have to be ready to jump. You have to be ready to strike. You have to be ready to do it. And if you don't know how to do it, if this isn't in your back pocket to know how to short, then you're going to miss opportunities. But shorting and making money is something that I love to do. I love to short. I mean, that's just never going to change. I just made a whole career out of it, trading now for 18 years. And I've traded through bullish markets and bearish markets and sideways markets. So I've shorted in them all. I mean, again, we sometimes go long. We did calls in Tesla. That went today. Tesla rallied today. We did calls in that, but I'm mostly short. Any questions here so far? Again, I see some people that came in late. Does everybody know how to chat? You go down to the new chat and you type a chat. Everybody see it? Hello. Anybody there? Dave is chatting. Dave's alive. Okay. If you don't know how to chat, you have to go to new chat and then you type in the room. Okay, getting back to what I was saying, focus counts. One individual can trade the market successfully as a career with a dependable method. In order to reap the rewards that the market has to offer, you need a quality system to follow. The central structure to trading results must be a strategy with a solid foundation that is based on accurately reading price action. The other powerful factor in being consistently profitable is having an edge. Shorting gives traders an edge, and it gives me an edge. Many traders don't know how to short or won't. They just don't want to touch it. And even the ones that do, many stink at it because they don't understand it. They don't know how to do it. They always short at the wrong time. So again, who shorts? Some insiders indicate that it takes a certain type of person to short stocks, like somebody that's negative or whatever. That's not true. I short all the time and I'm a very positive person. It's not like I'm like down in the US economy or something like that. It has nothing to do with it. You know, you get hedge funds that short, large institutional traders, big long-term investors, banks have trading desks they short. Again, I consider myself a day trader, even with the options I'm doing, but again, you can short in an uptrend and a downtrend. It doesn't mean you're like betting against the downfall of Amazon or something. Amazon's not going anywhere. You just do it for a day or two and you're in and out, okay? Or you do it for a day trade, you're in and out in 5-10 minutes. But anyways, what is a short? Short selling is the selling of a stock that the seller doesn't own. More specifically, a short sale is a sale of a security that isn't owned by the seller, but that is promised to be delivered. That may sound confusing, but it's actually a simple concept. When you sell a stock, your broker will lend it to you. You have to have a brokerage account. Again, you can buy a put, which is a short, or you can short it on margin. The stock will come from the brokerage's own inventory, from another one of the firm's customers, or from another brokerage firm. The shares are sold and the proceeds are credited to your account. Sooner or later, you must close the short by buying back the same number of shares called covering and returning them to your broker. If the price drops, you can buy back the stock at the lower price and make a profit on the difference. If the price of the stock rises, you have to buy it back at a higher price and you lose. Again, when I do a trade, I put in a stop. Okay, so if it hits the stop, then I'm out and I'm out with a loss, like I showed you in the stats. If I short a stock at $10 and it drops to $9, I have 1,000 shares and it drops $1, what am I up? $1,000. And then I'm covering it when I'm exiting it at 9. Okay, everybody understand that? And again, if you have any questions about shorts, ask me. Anyways, getting back to this idea of panic, why does it matter? Like you said, well, why did this do this? Sometimes there's a reason, sometimes there isn't a reason. Sometimes the market rallies and you think it should be falling, and the reasons seem negative, whatever's going on in the economy. Sometimes the opposite happens. You have positive news or positive earnings, and a stock sells off. You scratch your head, so how can that happen? That doesn't make sense. Again, it's really interesting because it doesn't always match up to what you think. But it is always about fear and panic when the selling comes in. And again, it goes fast. So you could make money in like 5 minutes, 10 minutes, which is one of the reasons I focus on the morning. It's just quick. And so if you're someone that's like, oh, I can't do the fast trades, you're missing out if you're not doing the fast trades. That's number one. Number two, you can buy a put and you can ride it out. If you want to ride it out for several hours or a day or two or a week, you can ride it out if you don't really want to get in and out fast for the day trades. But panic doesn't come in quick, and that is what I find to be a big advantage. So, you know, again, talking about trying to figure out how to get somewhere with trading, particularly not just as a career, but to actually make a lot of money doing this, I think you really do need a niche. So I got really good at shorting, and I got really good at reading gaps to determine directional bias. And then I also got really good at trading on the 1 minute chart. So when I take trades, and we're going to go over some trades here, I short it on the 1 minute chart. So I trade in the 1 minute. And it's something that I teach in the class. I've become an expert in doing. I run the live trading room and I call the trades live in the room, and you can do the trades with me if you want to. That's the whole point of being in the room. So this was last week's room results actually. Monday, we did Apple. Tuesday, no trades. Wednesday, we did Mu. Thursday, we lost in NVIDIA. We made money in the Qs. We did a second trade in the Qs, and I lost, and I made money in Oracle. That was a big trade. Oracle has been our big winner, actually, for the last 2 weeks. Again, this is a short. We've been shorting Oracle. And then Friday, no trade. So $33,435 were my results last week. Again, you could risk half this. You could risk a third of what I'm risking. You could do a quarter, 25%. It's the idea that you have more winners than losers in order to make money. Okay, so we had 1, 2, 3, 4, 5, 6 trades, 2 losers and 4 winners. And that's a week. Okay, that's a week. It's funny now looking at MU today. MU had a huge move today that lifted the market. But we did a trade in MU. This was the one we did on the 24th here. Stock closed here, gap down. MU actually had earnings, and we shorted it. So you see the gap. Again, it closed at one price at 4 o'clock and opened at a different price, a lower price here at 9:30, and fell. So this was the MU. This was the MU 1 minute. Stock closed here, gap down. Again, we're on September 24th. I think there was a Monday. Was it a Monday or a Tuesday? I don't even remember now. No, it was Tuesday. Fell, dropped. We got in, waited, got the drop. Boom. Now, this was an example of one where some people did get out quick. And I held this one. I was trying to squeeze it, and I thought it was going to drop. I actually really just missed my exit here to get out quick. And same thing here. I was like, oh, and it bounced. I really thought it was going to keep going. And I was right. But this was one that was not fast. Again, why? Who knows? But got in at 162.70. Risk was 45.60. Added at 162.80. Average price was 162.75. Got out at 159. It was a good exit. I think it went down to 158 something. Profit was $9,000. What if you risk 15.20? Again, you have to have a margin account to do this. It's a margin trade, 400 shares. Added, you could have made $3,000. I see some people coming in late. If you don't know how to chat, you go to new chat, and then you type my name and choose my name. You get how it works in a $10 stock to short because one can afford to buy some shares to day trade. We're shorting, not buying. But I think that's what you mean. But you seem to do big companies like Tesla. Well, Tesla's over $400 a share now, not $350. It's even more expensive now. How do you need an account? How much movement do you need like in Tesla? Again, let me see if I can pull this up here. Can you see the chart? Dave is asking about Tesla. Can everybody see it? Hello. Brian says yes. Tony says yes. Dave, are you there? Again, first of all, we did calls in this. We didn't short this today. We did calls a couple days ago. I was down in it. I was down in it before it went. Again, you have to be patient. But even doing an option in this, to be honest with you, Dave, right now, no matter how you trade this thing right now, it's not cheap. So that's that. So say you're like, oh my God, I can't do this. It's too expensive. Well, then you don't do the trade. This isn't every trade that we do. So if you're doing a call in this right now, it's not cheap. That's number one. If you want to do a margin trade, it's not cheap either. Now, is it cheaper to do a call if you did the call with me, which we went long here? Is it cheaper to do a call than to buy it? Yes. But if we had gone long here, look, it would have stopped. So again, if we had gone long this today, which we did not do, but if we had gone long this as a day trade, yes, it would have been more expensive than doing the calls. We were already in the calls. So it's cheaper no matter what the price is, whether it's $400 a share or $200 Amazon or the market, which is crazy expensive right now. When I say the market, I mean the QQQs of the SPY. It's always cheaper as far as how much money you need to take the trade. So when you're doing a margin trade, you need margin, a margin account where you get buying power. Say you need 100,000 buying power. It doesn't mean you need $100,000 cash. If you get 4 to 1, you need $25,000 cash. You have 100,000 in buying power. It doesn't mean if the trade loses, you lose 100 grand. You still set your risk the same as if you're doing a regular trade, no matter what. Anything you're saying, well, I'm going to risk 500 bucks. Okay, you can risk 500 bucks and do a margin trade, even if the cost to do the position might be $85,000. Does this make sense? You have to understand margin. Now, if you're like, oh my God, this is so expensive. Okay, if the stop's $3, Dave, it may be irrelevant that you can't do 1,000 shares of Tesla anyways, that you don't have $440,000 in margin to do 1,000 shares of Tesla at 440. I'm just making up a number. We didn't go long this today as a day trade, but I'm just saying, because you maybe couldn't have done it anyways, because your risk might not be $3,000 a trade, because the stop probably was $3 or $4 in a day trade here. Again, we didn't do it, but I just know the stop. Does that make sense? So if you could do 100 shares, then maybe you could do 100 shares, and then the buying power is much less, and then your risk is maybe $300. So then it's either way. If you're saying, well, I want to take as many shares as I possibly can, okay, fine. If the calls cost $11 or $12, you still have to be willing to risk $1,200 to do it if you're going to take the size. So it's sort of like your risk has to do with whether you're doing it, no matter what, your risk has to be close to equal in every trade. But how much cash you need to take the trade varies. If you're telling me I have 50 grand and I don't know if that's enough to day trade. Yes, it is. That means you'd have 200,000 in buying power, and that's plenty. If you're like, I have 50 grand and I'd rather do options, okay, fine. That doesn't mean you should be going out, swinging like swinging a big bat, risking $5,000 a trade. Because then what if I call 10 trades? You have your whole account at risk. Does that make sense? So if you have 50 grand, yeah, you have 200,000 buying power, but maybe the stop is $4. So it's irrelevant that you could take XYZ amount, because you're not going to, because of the stop, because you're going to risk maybe $500 a trade with a $50,000 cash account. Does that make sense? Is anything I'm saying making any sense at all? Alex is listening. Wonderful. Does that make sense, Dave? So it's sort of like, I'll just tell you, like off the cuff, more expensive stocks have bigger stops. More expensive stocks have higher price options. More expensive stocks have a bigger spread. It doesn't matter if you do it as a day trade or an option, it's going to have a spread. So that you have to account for as well. And if I call 10 options and you're like, okay, 4 of these I can't do, they're crazy expensive, then you're not doing 4. So then you're doing 6. It's not like you're not going to be able to get any trades. Or if we go long Tesla as a day trade, you're like, oh crap, I can't do that today. Okay, then you don't do anything today. Then you don't do that one. Or you buy a call in it. You know what I'm saying? You figure it out. Like, you have to work within whatever you have to work to make it work. That's life. That's life. I mean, that's life. It's like, I have money that I'm figuring out what I want to take in a retirement account. I was talking to a friend about this earlier today. We were texting. I'm like, well, I have a certain amount. I can't just throw as much money in my retirement account as I can. No, there's rules and things. I'm young. So I have what I have. And I have to allocate what I have to take whatever I want to take. So I'm trying to figure it out. And prices are moving and I'm trying to figure it out. So it's like, I have what I have, and like money to use to buy stocks. Like, that's it. I can't add until next year. Like, does that make sense? So like, it doesn't matter. Everybody has limitations. This idea that you have no limitations is like fantasy world. I don't care if you're rich or poor. Everyone has limitations. Any other questions? Alex said yes. I was going to make another point here and I forgot. Now I just lost my train of thought. Shoot. Well, I'll think of it later. Okay, let's talk again about what is a short. Again, stock closed here, gap down, open, dropped. So this is a gap. Closed up here around 133 and change. Gap down here at around 123. Fell $10 overnight. Are you going to buy it or are you going to short it? Again, this is what I do very well. I try to figure it out before I do the trade, obviously. And if I say, no, this is going to continue down, I get in. And again, whether you get in as a put or a short on margin is up to you, okay? But again, the whole concept of shorting is if Dow is trading at 122 and it drops under 122, anywhere it drops under 122, the only way to make money in the stock is to short it. If you're betting it's going to drop, okay? You say, if it goes to 121.75, I made 25 cents, you're up. If it goes to 120, you made $2 times however many shares you have. Again, same thing if you do contracts, if you're doing an option. Anywhere under that price, you're going to be up. You're going to be up, okay? So again, how do I find shorts? All over the place. There's a million places. You don't have to buy a special scanner. You can find them everywhere, literally. It's not hard. The difficult part is to determine, number one, finding the best pick of all the picks. If there's a million things gapping, you're like, oh my God, I don't know which one to do. Then you got to find one that's going to follow through, that you can predict the direction is going to go, whether up or down. And again, that's what I'm good at doing. That's what I do every morning. That's what I teach in the class. So this is when we did 829. I haven't looked at Dell for a while. 122.70, we shorted this, got out at 121.10. Nice trade. Profit was $9,600. Good trade. What if you did smaller size, 1,300 shares? Again, you're like, oh my God, I need a margin account. Yes. You would have needed to have 122,700 in BP to do 1,000 shares. Divided by 4 is the cash you need. Okay? But what if you were like, oh, I can only do 200? Okay, if you do 200 shares, that's fine. That's fine. You're still up. Make $1.60. You'd be up. You would have doubled your money. That's a good trade. So how do I figure this out? Using a 26-point checklist, I go through and I rate the gap each and every single morning. I go through the process. I don't skip it. When you skip it, you're making it up as you go along, then you really have no idea what you're doing, and that's what a lot of people do when they train. Again, I get up very early. I'm up the crack of dawn. It's dark now when I get up, because until we change the clocks, very dark. But I figure out what I want to do before the open. And then I use a 26-point checklist. If it rates 20 points or more, take the gap in the direction of the gap. It's very simple to learn. And then you just follow the process and do the trades. You are responsible for sizing yourself correctly, though, if I call the trade by setting your risk at $500 a trade or $1,000 a trade or whatever you want to do. And again, it should be equal. And that's, if you're not good with numbers or math, then you just have to buy a calculator. But the philosophy behind the 26 points is to find stocks to trade that have, number one, a high probability of directional bias for the entire day, big moves on the day, early confirmation of my bias in the move between 9:30 and 10, and precise entries with follow through, and a good risk to reward. So again, looking for early morning entries, early morning trades. Okay. Now, again, why do I like to do shorts? Because again, you get big fast moves, okay? But even if I would go long, I'm looking for institutional money. Again, Tesla got bought today. We were long it. It went up, okay? So the big power money people buy stocks and they do short stocks too. We had a week here, 2-week period here where NVIDIA just fell like a rock. Closed here, gap down, fell. Closed here, gap down, fell. Closed here, gap down, fell off a cliff. So a beautiful sell-off happened here. It was the last week of August into the beginning of the Labor Day period where the stock was up here at 180, fell all the way down here to 160. Fell 20 bucks like that. So again, if you don't know how to play this, you're missing out. It's opportunity. It's opportunity. Opportunity, you say, well, opportunities are every day. Not the same. There's some days that have more opportunity than others. There's some days that have bigger opportunity than others. Some days where there's nothing to do. Like last week, there was 2 days we didn't do anything. There wasn't any good gaps. So precision and detail matter. Accuracy counts in trading on all fronts. Quality strategy, you got to have that. You need a good risk to reward. We're trying to make 1-to-1. In options, I think 50% is good, but I'm trying to get to 100%. You need the right entry, which I teach in the class, correct size, which you can ask me what I think of your account size if you want to ask me. Proper exits, which we go over in the class too, and targets. So being successful in the market takes detail and a certain level of precision. Detail matters. I'm extremely detailed. I'm a very detailed person. If you open up, my nail polish, cabinet in my bathroom, everything's lined up all the colors. Like I'm very, like I'm a Virgo. I'm very into detail. Doesn't matter what I do. Cleaning my house, trading, money, I'm very detailed. So that actually makes me very good also to what I do and someone to follow. It can make a difference in you making a lot of money some days, or it can make a difference in you losing. You have to learn what to do and you have to learn when to do it. And so you have to train your brain and you train your eyes to look at things correctly. And this takes time. It's just something that you have to do. If you've been doing stuff and losing money or back and forth over the years, or don't really have a strategy or system, you got to learn something where you can do it and train your eye on how to look at something. Again, this was a really nice call. NVIDIA has been very bullish, and yet we did it. We got it. We got this move. So training yourself and your brain how to see something to be able to take the trade also makes it easier for you to take the risk too. Your brain is working, and all the work we're doing in the pre-market before the open. But I'm focusing on momentum. Again, I prefer to short, but we're focusing on momentum. This isn't trend trading, it's momentum trading. Whether you do it as a day trade or an option, it doesn't matter. It's the momentum. Again, we're talking about big fat red bars. This is how you're making money short. What happened here, we did the Chewy. Stock closed up here around 42 and change, gap down here to 37, open, dropped. This was September 10th. This was a nice short. Did a put, did a day trade, boom. Again, you could do both. You could do one, you could do two, you could do whatever you want to do. I'm not doing swing trades. Okay, so, but again, you can do an option, get in, get out. You could do a day trade on shares, get in, get out. So again, either way, the idea is you're picking the Chewy, finding the Chewy, saying, I think Chewy's going to drop, fall under 37, which it does. Comes down, breaks 36, 35, comes all the way down to 34 and change. No, this is a daily chart. This is a daily chart. You're looking at a daily chart here. That's where you're seeing the gap. Right there. Boom, boom. Here's a 1 minute. We can see the gap here too. Closed here. This is closed here at 4 o'clock. Gap down here to 9:30. This is a 1 minute chart. We shorted it, got the drop. Boom. Again, you could have held the day trade longer. But I got out of it pretty quick. 36.65 was a short, exited at 35.90, made 37.50. What if you did a smaller size? Again, could have risked 11.40, made 900 bucks. Kind of funny though, looking back, I got out at 35.90. Look where it went. Again, I think it's easier to hold options personally than it is to hold day trades. But you could have moved your stop. You could have lowered your stop. You could have put it at break even. Could have put it down. Could have held the day trade down. Okay. So that's how you manage that. Again, is totally up to you. Same thing with your risk. It's the idea of finding the Chewy, picking the right stock, knowing it's going to fall, and taking it in the right direction, which was a short. Now, again, how does the time of day fit into it? We're focused in the morning. That's the be-all, end-all. And again, that's why you got to be in the room up early and looking at what to do. I mean, you can watch stuff at night, but we're not trading late in the day. So there's a certain precision in the first part of the day that you don't see as the day goes on. Things get wiggly jiggly. You have news, you have Fed minutes, things take elongated time. Stuff tends to drift then with the market. If the market's falling, stocks fall. If the market's rallying, if they pull back. There, you can do stuff in the morning, get in, get out quick as day trades without having to worry about the market. So there's a precision and focus that's there in the morning, which I think is important to trade in the morning. Now, we're talking about options. This is an option we did, and it's just hysterical to look back at the fact that we did this. We did puts here, what the market is. We did the 550 puts. It expired on the 29th, on the 19th in the Qs. I mean, it's just almost comical to look at where this market is now based on this. Closed here, gap down. We bought puts. We got a sell-off down in here. It never even got to 550. It didn't matter because I was in this trade here with a strike and it fell. I made money, and that's the beauty of options. You don't even have to get it to the strike. So look at this. Got in, got out. Got a big sell-off for 2 days down straight. So again, options are a tricky thing. Time counts, direction counts, but also how fast they go. These were cheap because they were so far away from the 550. And it was a great trade. It was 134% return investment. Cost was 160, sold at 375. What if you did 1? Could have risked 160 bucks. What if you did 8? Could have risked 1280. Made 1720. Nice trade. Again, you don't have to risk $1 million. And you don't need more than the 1280 here because this isn't a margin trade. Okay. And what if I call some, you're just like, well, that's too expensive. You could do a higher strike than in Tesla. You could do a far lower strike in the put if you want to try to price it in where you could get it more. Does that make sense? Any questions from anyone here? How are we doing? Hello, is anyone there? Any more questions from Dave? Dave, are you trading, Dave? I know you've been following me for a while. I don't know if you're trading. Brian, I don't recognize you. Are you new? CJ, you've been following me for a while. James, I see you. I don't know if you're ready to come back. Jess, you've been following me for a while. Jim, you look new. Josephine and Manny, you both look new. The new people, Alex isn't new. Alex is an old timer. New people, old people. I really didn't follow anything about the shutdown today because I was busy. I know the government shut down. But I think more people were furloughed tonight, I don't know. JD Vance did talk today on Fox, but I missed it. I didn't watch it. I'll catch a replay tonight probably. I usually watch Laura Ingraham at 7 o'clock. I'll have Fox on it when I make dinner. And then, I don't know, we didn't really react negative to we rallied today, but it was all Mew. Mew ran up today like a crazy person and lifted the whole market. I didn't even see this till after it went. Again, this didn't really gap. It actually gapped down. It really didn't gap at all. It just took off like a rocket. There was news. And so then this lifted the sector and the whole market. And I didn't do anything in this because the time I saw it was like here. But again, this lifted everything. So we were down this morning. We started the day down. We were way down this morning. When I rolled out of bed, we were way down. And then we lifted and we made new highs today, actually. Surprisingly, 602.87. Again, that sector moved the market up. But again, I don't know where we go from here now, Thursday, Friday, because I never expected us to do this. But I will tell you, I won't be surprised. If we continue higher and make another brand new high tomorrow and Friday, I won't be surprised. We have an unemployment number Friday. If we bomb, sell off, fall off a cliff Thursday and Friday, or Friday on the number, I won't be surprised. So this is a market where you just take it day by day. Like that's pretty much, I get up, I look at what I'm doing. But I will say one thing, this volume is crazy, 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 crazy low. This is like nothing. This is like 1/3 of the volume you would normally see in a day like today. If you were like, oh my God, let's go long the world. This is like next to no volume. Now it is a Jewish holiday, I think. I think it's a Jewish holiday, but this is not a high volume day for a move like this. You watch Jesse after Lauren Hannity. You do debit spreads right now, but your trading system is very intriguing. Okay, I never did that. I never did debit spreads. I never did that. I was going to say something else. I forget. Okay. So again, we were talking about setting goals. If you're like, I really want to make a lot of money, first you have to learn it. You're not going to make money or do well if you don't learn it. You can say, well, I'm going to follow all your trades. Okay, fine. But you still have to learn it. Why? The trades go quick. The trades set up fast. You have to press the button. You have to size yourself. You have to see the same thing as me or close to it at the same time live. It's live trading. I mean, live movement. So you got to learn it. Okay? And then you can set your goals for where you're at today. And you can say, okay, between now and January 1, I'm going to risk this much money. Between now and January 1, I'm going to make this much money. And then I'm going to look to increase my risk January 1. And you see how you like make goals for yourself. It's like if you're in an exercise program, you know what I mean? Or you were trying to get off sweets or quit smoking or get on a diet or lose weight. You're like, you're not going to lose like 50 pounds in a week. You're like, okay, I'm going to try to lose 5 pounds by such and such a date. Then I'm going to try to lose 10 pounds by such and such a date. This is the way it is. This is not the way people think though. I'm just like, from my experience teaching people for as long as I have now, 15 years, I'm telling you, everybody wants everything yesterday, tomorrow. They want to make $1 million tomorrow, next week with like a $5,000 account. If you are realistic and you are focused and you are goal oriented and you are focused on learning and doing the actions necessary, you will get there. My system works. But if you're all over the place, you know, swinging a big bat, not focused on what you're doing, not learning, you're never going to get there. Do you know what I mean? If you're doing this trade, this system, flippy flopping, going long and short the same stock the same day, you're really going to struggle. You can't be like that. You have to look at this as something serious that you're doing, and you have to set goals for yourself. And I'm telling you, that's how you're going to do it right. You have a TradeStation option account. Will it work for what you do, or do you need a different platform? No, TradeStation's fine. You can make your charts look like mine at TradeStation. TradeStation's good. You'll be able to short. You'll be able to buy puts. You can do whatever you need to do. So how many gaps do I get per week? During each quarterly earnings season, we're not in earnings season now. Again, it starts not next week, but the following week. We get 3 to 5, I'd say, a day. In non-earnings season, maybe 3 to 5 a week. Now, last week, like I said, we had 6 trades. It's not earnings season. Okay, 4 winners and 2 losers. A quality gap is one that rates high enough to trade based on the 26-point rating system. Okay, so important to, again, pick the good ones. Quality. It's like if you were going out to a nice restaurant and they had fancy wine. Again, if you had the money to buy expensive wine, why wouldn't you? Why wouldn't you get a good wine, a good glass of wine with your steak dinner? Would you pick the cheap one? Again, quality. A plan for booking the money quickly. So say you are like, this is so quick. Again, I did a mentoring session with a guy today. He's like, oh my God, these go so quick. Well, he got out of the BABA before I did on Monday. He just saw the money and he hit out. So again, you may think you can't do a quick trade, but you can. You're just not used to it. You're not in a habit of doing it. So again, and you'll be excited when you see the money come fast. Do you know what I'm saying? So it's like, you may think, well, I'm not used to doing this, but you will get used to doing it. So again, I'm very habitual with what I do. I do it. So in order to make 6 figures a year or any money at all, you need a business plan. You got to get organized. If you want to do it on the side, that's fine too. It's not a lot of time during the day, but you've got to have good quality trades, good risk to reward to get the good results. And again, what's a good payout? I think 50% to 100% is good in an option. When we get really big trades, it's because we're in a stock overnight and the stock continues in our direction. So we could be in a put and then stock gaps down and we're up a lot. Then you can just get out into the open. Okay. If I'm in a day trade, I'm looking for 1 to 1. If I risk $1, I'm looking for $1. So again, 1 to 3 is great. Sometimes we get trades 4 to 6. Sometimes we get really big trades. Like earnings season, we're going to get big trades. It's a good time to sign up and do the class and start trading with me because in 1 week it's earnings season. And what's going to be really interesting about this market, even though we've been running up like today, earnings season could collapse this market. Why? If stocks don't have good earnings. That was what made the market sell off the other day when the Fed chairman said he thinks stocks are overvalued. I forget what day that was. It was one day last week we sold off. I have to look that up. In fact, I should pitch Fox to talk about that because I'm telling you, earnings season could shake this market. Now, it could make the market move continue up. That's true. That could happen too. But if earnings aren't good, or they're good but the stocks react negatively, that will pull the market down. Because all the market is stocks. Again, you had a monster move today and lifted that sector in the market. But I can teach you how to short. I can teach you how to make money shorting if you want to do it. My system is called the Golden Gap System. The Golden Gap System is a 26-point professional bearish gap rating system. The purpose of the system is to help you evaluate which gap to trade each morning using a checklist. So you learn the checklist in the class. You can learn it. You learn it like you're going to school. It's an online school. The Golden Gap course teaches a 26-point rating system to find the best stock to trade each day. The course also teaches you how to enter and exit the stock on the day to get good risk to reward trades, which you want. I'm not trying to take a trade for 10 cents. The course teaches price analysis and technical analysis on an advanced level. And the course teaches a more proficient way to read support and resistance in the right direction. The course teaches you to focus on one strategy in a detailed manner so you can become a good trader, which hopefully you want to do. And if that isn't your goal, I'm telling you it has to be your goal. The money comes after that. Do you follow what I'm saying? Get good. Get good. Become an expert. Get good at something. Then pressing the buttons is easy. So the Golden Gap rating system is a 26-point checklist. This is what you learn in the class. And then we go through all the entries and the exits too. But the philosophy behind the Golden Gap system is to analyze a large time frame to make the trend decision on the directional bias for the gap. All large traders of every kind look at large time frames to make decisions, particularly institutional traders, like we were talking about earlier. To make entry decisions and exit decisions based on a small time frame. Again, we're trading on the 1-minute chart, looking at the gap on the daily, which has a high degree of focus and accuracy. Remember, on the 1, it's quick. Using the daily chart to make the decision for the stock pick allows for accuracy in the direction, and using the 1-minute chart allows for good risk-reward trades with accuracy. Again, this is what I'm very good at doing too, which is why people like the room. But for me, when I started out, it's not like I ever, made a lot of money in just some dumb trade and got lucky. I really needed to develop the skill to make money, and I guess that was my path. But, if you do something, you make a lot of money in a trade and you don't know what you did, it doesn't mean you're going to be able to replicate it. It could be a once-off. A lot of people saw that with the meme stocks. And some people are still invested in those stocks and they may never go anywhere, and they're down in some of those trades. So a good system, is a system that you can duplicate every day, forever, in any market conditions. That's the whole point. Does that make sense? And again, the fact that we're shorting in a bullish market is proof of that. So success in the market is about skill, not luck. To be successful as a trader, it's not about luck, it's about skill-based career. All highly paid careers that you make a lot of money is a skill-based career. A musician, attorney, physician, a dentist, anything. You need to have the right skills and knowledge in order to succeed. And the interesting thing about trading is that people either, one, don't realize how important the right knowledge and skill set is before they risk money in a trade, or two, they think they have the right knowledge, but they don't. And I've noticed this over the years, over different markets, over different periods. I've noticed this, a lot of experience talking to a lot of people, meeting a lot of people. Any questions here? How are we doing? Okay, so is the class beginner or advanced? It's an advanced class, okay? If you're new and you never traded before, again, I've taught people that have never traded before, you'll take notes, you'll come back, you'll ask questions. I'm doing a special right now that includes 2 free mentoring sessions for 1 hour. We can meet, after the class. So again, you want to get your money's worth. It's an advanced class. And that's okay. I've explained things well, I think. There is more than one step, though, on the ladder for most people's journey. If you've been back and forth, again, 10 steps up and 3 steps down, for a number of years in the market, I'm just telling you, don't give up. Don't give up. You'll know when you find something good. You'll know when you get on the right path. At some point, you do need to get on the right path if you want to make it. And again, for everybody, it's a journey. It's not like anybody's just born and all of a sudden starts to trade and make money in the market. That's just not realistic. But if you have a negative attitude towards making money or trading, or if you're in fear about things, or you're hanging on to the past about classes you took and you didn't learn anything, or money you lost in trades and you regret it, it's going to be difficult for you to move forward. You have to let it go. You just have to let it go. Again, I tell this story at the other webinar a couple months ago when I was in the middle of it, but I had dental surgery in March. I think I'm at the end. Like, I went last Monday. Like, I was saying to my mom today, I might have to go back one more time, but I might not. I don't know. It's March, April, May, June, July, August, September. It's October. 8 months. I'm just not going to even get into detail, but it's like, I never knew if I was going to get through it. Like, that's really what I was like, in crisis mode, actually. Like, because I wasn't getting help. I wasn't getting the care I needed from the dentist that did the work. And then I found somebody else in his office that ended up helping me towards the end. But and every human being, when you go through things, it could be something with health. It could be a financial thing. It could be a relationship. You have to push forward in life. You must. There's no going back. Like, I was like, I should have never done the work. It was too late. It was done. It's like there was no way to feel good again without pressing forward. And I got to give myself credit. I'm a very determined person, just like I figured out this system. I was so determined to get well. I wasn't determined. I wasn't going to be in pain for the rest of my life and have a messed up mouth. I said, damn it, I'm going to get well. And I just kept pushing and pushing and pushing this dentist, and I went to other people and got second opinions. I mean, I just didn't give up. And it was the same way with my trading. When I was back and forth and I was losing, I said, gosh darn it, I know I can figure this out. I'm smart. But it took me 3 years. So if you give up, it is the easy way out. And again, we live in a society where most people give up. I mean, part of the reason the government is looking to shut down now is because they're fighting over programs which they want to spend money on. One side wants to spend money on some programs that the other one doesn't want to spend money on. All these government programs. And look how deep in debt the country is to begin with. It's a mess. You have to be able to rely on yourself. And I'm telling you, if you can do that, you're going to be okay. Because even if you don't have all the answers, you will be encouraged and motivated to find the answers and get help and find a class like mine and a mentor like me. Just like I was looking to find answers about my teeth. Do you understand? You can't go back. There's no going back. And you don't help yourself when you're in a negative mindset. You hurt yourself. You're working against yourself if you're thinking negatively. You got the rest of the world working against you when that wants your money when you're in a trade. Everybody wants your money. Everybody wants your money. That's how people make money. They take somebody else's. So don't work against yourself. Do you know what I'm saying? Any questions here so far? Anyways, reset to move forward. If you're ready to do it, it's a good time. It's fall. It's all about your mindset. You want to think like a successful person. You want to be positive, and you want to do well. So don't let anything stand in your way of success. Again, you can do this from home, which is great. Think about what I said about chunking it out. Set your goals, and you can empower yourself today by learning the system. The Golden Gap course is a complete system used to trade. And again, I've been doing this for a long time. You will learn the 26 points, which is a rating system. You will learn the entries, you will learn the exits and the targets. The class is called the Golden Gap course. It's a full 2-day course on how to strategically find, pick, and play stocks that are professional bearish gaps. Class is online. You can be anywhere in the world and take it. Dates are October 11th to 12th, so not this weekend, but next weekend, okay? 9 a.m. to 5 p.m. Eastern Time. Cost of the class is $6,999. If you're interested, email me to sign up. And again, the training room people love because we're there every day. We talk about gaps. We talk about the room. And again, I'm doing a bundle special, which is all the classes, the trends, the gap options course, and the Golden Gap course, which is a 2-day class. So you get 4 classes. It's 9 to 5 for the Saturday and Sunday. Tuesday, trends, options course on Thursday. And the bundle price is $89.99. If you want to do it, I'm offering a Ghostbusters package. If you sign up for the bundle by this Friday, I extended it, the deadline is Friday, you get the market report, the options newsletter, and the training room, and 2 free mentoring sessions. You get all the subscriptions free until the end of 2026, and this ends Friday. And the cost for the bundle is $8,999. Any questions from anyone about anything? New people, old people? How are we doing? Exciting time to trade. And again, lots of stuff going on. It's economic stuff. It's a government shutdown. It's stocks moving, news in the stocks, earnings season in 2 weeks or a week and a half. It's just there's so much going on. Fall trading tends to be busy. But I'm telling you right now, this volume in the market today is low. Very, 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 very low volume for the rally that we had today. And it's something that I was noticed this morning. So just keep that in mind. We're glad we got the Tesla move today. Any questions from anybody? If you do have questions, you can always email me. I'm here. I'm gonna make dinner, but I'm here. And you can also call me. You want to call me here at 929-320-0427. Remember, I live in New York. I'm Eastern time zone. Michael, I saw you come in late. I think you missed a lot, Michael. Saw you come in late. Any other questions from anybody? Listen, have a wonderful, wonderful, wonderful evening. If I talk to you, email me, or you can call me if you have any questions. I know, the Ghostbusters, it's one of my favorite movies. It was on again last night. It was on again last night. It was on VH1 last night. It was on CMT the other day. It was on VH1 last night. It's probably on somewhere tonight. It's a kind of like a Halloween movie, but it's a great movie in New York. puts you in a Halloween mood. All right, have a great night, everyone.